Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Zak Mir with the weekend edition of the Bulletin Board Heroes here on Share Talk. It's Sunday, the 6th of December. Starting off with Anglesey Mining, where we've overshot the runway, which is always a nice place to be. We had a previous target there at the top of that rising trend channel from February, around 4.5 pence, and we closed well above that on Friday. While there's no end-of-day close back below 4.5 pence, looking for a final leg maybe to the rally up towards 7 pence over the next, I suppose, 2 to 4 weeks, maybe even sooner, given the way the stock is moving at the moment. Next up, a stock which I thought was delisting, but apparently checking the RNSs is still here, still going strong. At least the chart is going strong for agronomics, and obviously it's in a hot area at the moment as well. But on the charting front, at least, we've got a rising trend channel there from March. Top of the channel heading towards 14 pence, hopefully by the end of next month. And while we're above that old May resistance around 7.5 pence, 14 pence looks to be the destination for the shares. On to Bidstack, which I know that a lot of people have been willing to go higher for much of the year. Hasn't quite taken advantage of the small cap rally that we've seen in many analogous stocks, if there are any analogous stocks to Bidstack Group. But the stock of interest at the moment, in the sense that it looks like we've had a minor bear trap below the 5 pence level just to start December, and such bear traps can be the trigger for moves to the upside. Obviously, we've had a couple of false dawns here in recent months, firstly in September, although there was a bit of a move there towards 8 pence, and then in October, where we effectively broke a resistance line but didn't actually go anywhere. But at least we haven't really had any significant downside here, so it does look as though the shares are bumping along the bottom, and while we're above Friday's intraday low at 4.8 pence on an end-of-day close basis, the top of that rising trend channel from April, as high as 13 pence, could be on the way over the next 1 to 2 months. Clearly, if you want to try and lower the chance of it being a false dawn, you'd wait for an end-of-day close back above November resistance around the 6 pence level. So maybe give it another day of upside before considering your position. Next up, a stock which has been attacked by the bears on a continuous basis. Shares of Cat and I currently at 2.7 pence, which, if you believe the bear argument, is precisely 2.7 pence higher than they should be. But I suppose even if this company was a shell, wouldn't go back down below really the 0.5 to 1 pence area anyway. I think 0 pence probably wouldn't happen, not in this kind of stock market that we have at the moment. At least from a technical point of view, though, we've got the April uptrend line there running through around the 2.5 pence level, so good to see that the shares have bounced off that line several times in October and also in November. So above 2.5 pence, the bulls technically on the right side of the argument. Above 2.5, we've got that resistance line there from April at 4 pence, so that makes for the first target. But obviously the big win here would be if we could sustain 4 pence plus. We've had a few attempts at that, both in August and in November, and so far haven't managed to do that. But 4 pence plus, that could change the technical position of Cat and I. But as I said, above 2.5, still the glass half full rather than half empty. Less fraught situation coming up next in the form of image scan. Here we can see that the chart comes through. We can see that the shares have broken a line of resistance from August, and also the 50-day moving average on an end-of-week basis. The 50-day line at 2.29 pence. So while we're above that line, looking for relatively direct move towards that February resistance line projection, currently pointing at 4 pence. Hopefully that could be seen by the end of next month, and if we're really lucky, by the end of this month. This stage, only sustained price action back below really the 200-day line, 2.11 pence, really delaying the upside scenario for image scan. Onto a stock which has just kept on motoring. The fundamentals backing it. Seems to be a bit of a money-making machine at the moment. Jubilee Metals. We've hit the 10.5 pence May price channel top at that level, and really an end-of-day close higher than that over the next few sessions could open up the prospect of a March resistance line projection target as high as 14 pence, hopefully as soon as the end of next month, and as we're in the festive season, hopefully as soon as the end of this month. Bull argument very much intact while we remain above the November intraday peak at 8.8 pence. Onto a stock which I wish I'd looked at before, but here it is now. Kazero Global, nice little break here of this November intraday peak at 1.1 pence, and while we're above that, looking for a relatively direct move up towards the top of the rising trend channel from January, and that's currently promising a 1.7 or 1.8 pence target, hopefully by the end of next month. The upside argument really valid here while we hold above the 20-day moving average, currently around the 0.9 pence level, but hopefully we won't even go back below 1.1 pence. Stock that I don't think I've covered before, which is a shame, but probably looks like the right time to look at it now with this U-shaped bull flag. The late November peak at 49 pence, and end of day close above that should at least bring us 60 pence, which is that September resistance line, and best case scenario target up to the May resistance line projection at 90 pence over the next 1 to 2 months. But given that this does look like a U-shaped bull flag and a pretty powerful kind of formation, one probably doesn't have to wait for 49 pence to be broken for this particular setup to play out. Stop loss back below the 50-day line at 36 pence on an end-of-day close, or if you want to have it tighter, then maybe initial December resistance at 40 pence would do the trick. Next up, one of the strongest stocks of the week last week, and very, very impressive break there on Thursday with the gap through the 50-day moving average. Gaps through the 50-day line are one of the more reliable setups that you can have on a charting basis, and always things to watch out for. Also, we broke that line of resistance effectively from back in August. That was the August downtrend line. It's also at the 50-day line level at 6.71 pence. Current situation is that the Friday's price action was even more impressive than Thursday's, in the sense that there was not even an attempt to try and fill that gap, and we went nowhere near Thursday's 6.8 pence low. So that does show that this stock is really going for a re-rate. While there's no end-of-day close back below Thursday's high at 10 pence, we should head quite directly towards that resistance line from October last year. That is running up to 20 pence, hopefully by the end of this month, and perhaps even sooner, the way things are going. Got a request for the next stock, Okio, which is currently, obviously we've had the rather disappointing pullback from July-August peaks towards sort of 16, 17 pence, and remained either at or below the 50-day moving average for much of that time. The plus point, I suppose, at the moment is the way that we're just trading near the 200-day moving average at, let's call it 7 pence. We've also got an uptrend line there from May at the same level, so hopefully that's double support for the shares. If you're looking for a trigger here, then that would be a break of the October resistance line. Call that 7.5 pence, so 7.5 pence plus end-of-day close could at least take the shares back up towards October resistance at 13 pence. But it should really be the case that the shares bounce off or near the 200-day line, as they did both in June and previously as well earlier in the year. Stock which is also relatively rare for the Bulletin Board Heroes is Petroneft Resources. The reason for that is that, as you can see, from the daily candles, is not this company is not going to win any prizes for liquidity, but we have gap through the 50-day moving average and an October line of resistance, the 50-day line at 0.59 pence, and above that, looking for an April resistance line projection target as high as 1.1 pence over the next 1 to 2 months. The stop loss, I suppose, is quite simply back below the post-April support, which was around the 0.5 pence level. Just a couple to go in this rather long session today. First we've got a stock which is looking very rather similar to the previous setup, with the gap through the 50-day moving average and an October line of resistance for React Group. Also recent extended support just below the 1 pence level, so above 0.9 pence. Looking for further gains. Initially, the October resistance zone around 1.5 pence. A big picture target up to 2.5 pence over the next, let's say, 1 to 2 months, which is the top of the rising May trend channel. So nice little setup there for React. Finishing off today with another relatively rare inclusion. It comes in the form of ULS Technology. Here we seem to have a mid-move consolidation here above former resistance, which is normally a good sign. It does show that suggests rather that there could be further greater upside here. We also had no attempt by the stock to try and fill that gap, which was through the 70 pence area and through previous 2020 resistance. So that's another plus there. So looking for really up to £1.10. And that September 2019 resistance line projection, and that's valid while we hold above that old July peak at 71 pence on an end of day close basis. That's it for me today. More updates tomorrow.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.